Good morning, everyone, and welcome to Nadex Morning Analysis, where we talk about potential hotspots in the markets today, although they're not potential hotspots, they're actual hotspots. Uh, my name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. Before we jump into it, because there is a lot to discuss today, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right, with that, I am going to jump right over, and I apologize we started a little late this morning. We were having some minor technical difficulties, but I think we've sorted through them. All right, let me bring up what I do want to share. I mean, there's a lot going on. So just from the news level, uh, one, we obviously are all aware that the Fed minutes got released. They're looking at tapering their support of the economy. We will see that certainly is driving uh, markets lower. Equity indices all down in the red. Two, we had initial jobless claims come out. They came in lower. This is the lowest we've seen in a long time for initial jobless claims. So clearly the labor market is healing and recovering as we try to come out of the pandemic. But I mentioned the pandemic, and we do have some challenges. COVID, concerns about COVID are spreading. We're actually having to put masks back on here in Chicago. And then you've got the manufacturing index way down, and that is impacting oil. We've got oil just falling through the floor. I think I could bring up a picture of oil quickly. So, Brian, I'm actually, as I bring up crude oil, I just want everyone to see what we got going on. All right. So, we've got oil plunging. That's actually impacting the US Canadian dollar as well. The dollar seeing some strength, so that's impacting that as well as other currencies. And then we want to take a look at some of these indices as everything's looking to open down today, a continuation of the sell-off that we saw yesterday toward the end of the day. So, Brian, let me flip it over to you and let's see what we can dissect here and then take a look at some technical levels on the charts.
Sure. So this morning actually has a bunch of different kind of news releases out there, and kind of some that are hidden. The main two that people would have been looking at, the medium impact news, would have been the Philly Fed Manufacturing Index, which came in grossly under. Now, which is interesting because the manufacturing data we saw earlier in the week was actually a bit more on the positive side. But the Philly Fed Manufacturing Index is considered kind of the main manufacturing kind of guidance that we're looking for. Came in much lower than expected, and again, you're seeing kind of a response in oil in that one. Now, unemployment claims did come in lower with no revision, a slight revision up from last time. So it's always a positive step in that direction. Again, it's kind of one of those things. Whether it's sustainable or not is going to be the big question. And then besides that, we had some really good CAD data. They had a lot of hiring back. The non-farm employment change was 221,000 jobs created, which is great. There's another little hidden piece here, which again, it's not much we can trade with now, but it may be a potential rather soon here. This trade balance for the Swiss. We don't see Swiss data that often. They had a huge trade, again, 5.2 versus a 4.7. You don't have to understand the significance of this, but understand right now we're seeing a lot of strong dollar across the board. Euro dollar down, pound dollar down. Dollar yen is a little bit mixed right now, but dollar Swiss up. CAD, huge, right? And again, that's an oil play. Aussie dollar, even though they had strong data last night, also down. Right now, the Swiss is kind of battling the dollar and doing well. So if we have kind of a reversal after all this kind of strong data for the United States is coming, is absorbed, this could be a very potential, a big shorting opportunity here because, again, this is strong Swiss, and we don't really see a lot of Swiss data up here. So again, a lot of things in here. We do have natural gas today, which should also be interesting just because oil is basically just getting decimated right now. There are kind of two main things. One Todd mentioned was the FOMC yesterday starting to talk about tapering. That was something that, we thought they were going to come up with. And, there's a couple things in here. Dollar hits 9-month high as Fed on track to taper this year. kind of a quick thing. And again, we're talking about Australian and New Zealand currencies. They mentioned in here as well, not doing as well as expected. But the Australian news, and again, Aussie dollar is down 77. So you would say, man, that's just strong dollar. The Aussie is in bad shape. But if you look at yesterday as well, this just kind of shows you the unemployment change. They actually gained jobs and their unemployment rate dropped by 0.4 in Australia.
Right.
You may say, that's amazing for the currency. But yet, what's going on right here? Okay, so it's kind of one of those things. You can see how strong the dollar really is, and how many other countries actually are in pretty significant. They're in good places. Canada's in a good position. Australia, all their. I mean, remember they had an additional lockdown of 4 cities, a couple of other areas. They put curfews in, and yet they're gaining jobs, and their unemployment rate went down by 4.4%. So that's great for kind of the next step in what recovery is going to look like. But again, something like taper for the United States is a very, very big deal. The fact that they put a timeline on this year, also a big deal. But again, with all that positive news for the dollar, again, that tends to be as soon as you're holding back that support. We talked about all the indices are pretty much, they're going to be painted red. And that's kind of what we're seeing right now with them kind of pushing to the downside. That's kind of that's kind of the first ingredient into the red indices. The second aspect of that is what we heard from COVID yesterday, and basically the waning of the vaccines. Very, very big news. If you remember,
we didn't even mention that, right? We're all
I mean that's extremely and this is one of the things, and this is what the vaccine kind of I would say antagonist, because I guess it's kind of like two worlds, right? At this point, the people that believe and don't believe. Vaccines diminish. If you remember in the beginning, and again, this is a lot of the hesitancy comes around it. Some of the data yesterday, and again, the CDC is quoting these different things, but they're saying that Pfizer, who originally, remember when Moderna had 93, Pfizer's like, no, ours is 94, ours is 95, and a lot of people said, oh, it must be better, and again, that's not how it works. But now we're seeing, some of the data that we saw yesterday was saying that Pfizer only has a 42% effective rate, where Moderna is still a little bit higher.
At 8 months, right? So that knife cuts both ways, doesn't it?
Yeah. So, and again, this is not something that's. I mean, again, if you're familiar with pharma at all, this is not something that's surprising. Again, just the companies in general. Pfizer wanted to be first to the race. Everybody's saying that it basically COVID saved Pfizer. They're not stupid. They're very, very strong in business. They understand what they do. They had a patent cliff. They made tons of money off this vaccine. So now they're like, oh, we want to do it for kids and infants and everybody. Well, yeah, but the effectiveness is eventually what's going to matter. The J&J, they don't have enough data to be able to say how much it's reduced. They do expect that it will be reduced over time, which again, that's common. That's why we do the flu vaccine every year. But Pfizer's coming, dropping through the floor right now as far as the data that we've seen from the CDC. So, it's kind of one of those things. I'll tell you right now, with as much resistance as we have to people getting vaccinated, if every 6 months it's going to basically be invalidated, you're going to have more people that are not going to be taking it and basically demanding that they get something better. But again, not great for the overall economy.
Because that's technology that we've been using for decades and decades and decades. It'll be interesting to see how how all the data shakes out. Particularly out of places like Israel, where they're testing the entire population on. I mean, they're playing guinea pigs over there.
Yeah, and a lot of it's going to also depend on the virus. If you guys remember, what we've heard, and this is where kind of there's conflicting reports out there. And again, why every single indice is down right now. Almost. I mean, they're all the NQ is holding the most at 0.6% down. The UK was ahead of us. They've already seen the Delta variant kind of turn and flip back to the downside. Their policy was much different. It was one for everybody first before we started going into two. And we didn't see the same type of expansion, and numbers and acceleration and hospitalizations and even deaths, because they were in the one shot for everybody policy.
And everyone got it, and so they nipped it in the bud much more quickly. Where we went a little bit more. The United States was like, no, you have to have two, and again, and the reason why they did two, and the 3 weeks difference apart is because that's what they tried to test at the same time. But policies, it really rather interesting.
And again, Canada did it different than us, and they have it more under control than us. Again, it's being very driven by lobbyists, particularly with Pfizer. And again, if they have their way, I would say that the indices are in some trouble here. I mean, the Fed has to do something. Tapering is what's right now. But things like oil, I mean, you can see oil yesterday. I mean, we were talking about the 67 range yesterday.
We got a lot to look at.
67 yesterday is where we were, and we talked about how, again, it basically went up and it closed kind of right around that high yesterday, and then had a huge push to the downside, right? And then it just continued in the overnight, kind of based a little bit, and then even at 2, 3 o'clock in the morning, actually 3 o'clock is
It
right.
actually
Yeah,
paused a bit at that 65.5 level, which we had knocked off, and
yeah,
it paused there. It
yeah.
wanted to hang on, but it actually did, I believe, what you would call, or pretty close to, one of your Harry Potter trades.
Yeah, it hit the level and bounced and then started to base right above. And when you see that basing above, it shows you that sellers are starting to accumulate above that position. And
And
again, I
then
can move this kind of that's this the yellow now is where the area of interest is because you can see what happened is it based, it pulled up and it started to form a base up top, which again means that they're accumulating positions there. As it dropped down, it came back up at basically midnight and grabbed those same levels. It found that supply right there. And
yep,
that's what continued to push the downside. And you know, you could say this is pretty rare. I mean, from
a little hiccup, yeah. Oh, then
midnight
straight
to
down.
3 a.m., having a drop of about 60 cents. That's a big drop in that time frame. You know, normally we don't see this is normally what you have during that time frame. From like midnight, you know, you have
Right.
midnight right here. You have a little bit, maybe 20, 25 cents. 60 cents is a big drop there. So,
And part of this is it's summer. It's those evening hours. The markets are thin,
mhm,
and we saw some moves like that, for instance, in gold last week, where it is. I mean, there's just not as many eyeballs out there, and some of these moves are going to be a little bit more volatile.
yeah.
Meaning, there's going to be opportunity,
Mhm,
and I'd really say with binary options is probably a great way to be playing markets like this, because they are all or nothing. When volatility like that happens and you blow through multiple strike levels,
mhm,
trading the binary options, they're sort of fit for market conditions like this.
mhm.
Uh, so
Yeah,
now,
and I
what are we
understand
seeing
there's
in a
one other
4 year?
factor here too that we'll mention real quick, and then I want to show you guys the natural gas chart.
Yep.
Remember, also it's August, so we have additional supply coming along from the OPEC Plus agreement. So I would say right now, with it dropping as much as it is, we're due for an OPEC Plus news announcement where they're going to meet. Um,
Yeah.
because remember that market's all about greed, and you know we were talking. I mean, I can bring this back here. I mean, you can see back here in the very beginning of August, right?
Yep.
This is July 30th, August 1st, right here. The price was $74 a barrel. Now we're all the way down here at 63. So
63.
$11 so far in 19 days to the downside. OPEC Plus is going to be looking at this with the calculators and going, all right, how much money have we lost here? Because remember, there was a big battle of how much supply was going to come back online. Was it going to be 300,000, 400,000, five
We
hundred
even
thousand
had the
barrels?
U.S. Telling them, please turn up, or dial back your curbs and start pushing more production out.
Mm-hmm.
Uh, now it is. This is now it's going to turn into a political battle.
Yeah, it will. Yeah, it absolutely will as it pushes back down again. Because remember, right now, and again, with the cheaper that oil gets, the more people are like, all right, fine, I'll put it in my car, I'll drive it. I love cheap oil, and the administration is very much anti-oil, as they've shown with their policies. So it's one of those things. We'll see what's coming next in this
Yeah.
one. But
Meanwhile,
I,
we haven't seen this now, and this is just me being sarcastic, but it's rather interesting when you see oil spike higher, you see a corresponding move in the price of gasoline pretty quickly. As oil drops, you do not see that shift in the price of gasoline at the pump
no, it's,
drop.
it's always delayed. Yeah, it's
Yeah,
always a delay.
they run the price up at the pump very quickly. There's
Mhm.
no delay, but on the way down, they drop the prices very slowly.
It sounds very similar to our taxes, right? Right? If you owe money,
How
they
is
start
that?
tacking on principal January 1, but if they owe us a refund, we don't get anything
You
for it.
get
It
0,
kind of sounds
you get
like the same
nothing.
thing.
Yeah, I
Yeah.
know. Ah, that's
Anyway, guys, here's natural gas. Natural gas is down 1.87% today. The reason I bring it up, it's not necessarily the biggest market, but we do have oil inventory, or I'm sorry, natural gas inventory reports today. Um, and again, it kind of sneaks in. I'm going to have to do it on the yellow. Let me do it right here. And it's coming in at 10:30. The same type of volatility we've had in energy, you'll have it here too. And there's supposed to be a down draw. Again, if there's more of a, if there's not a down draw, but less than what we had last time, any change in that at all, we should have some decent movement as well. And we do have an area where we have buyers kind of stepping in here, just a little bit below at $3.75. So I'm okay with this. I hope this keeps dropping. Again, it came from an area of a larger time frame supply that we were selling from anyway. Um, with us going into the fall, there becomes a little bit more of a shift. As weather starts to get colder, we tend to shift out of the kind of gasoline as our main kind of energy, and we start to talk about natural gas. Now, it is August, so it's not quite there yet. But
Right.
with this as a pattern coming down, as they're starting to ramp up for their season, this is not necessarily a bad thing. But again, with inventory, there's options in here. And again, when I say options, I mean there are binary options that you'll be able to, that'll be in play today that will be very, nice trading opportunity that we can take. So look for this level. The way to look at this again, as always, just like with any other news trading, get in there, start looking at the 5 minute candles about 30 minutes beforehand. At that 10 to 15 minute mark after the hour, you should start to see some type of a stabilization. If it's in a level, and particularly a level like this that we know is a 4-hour and hourly based level, those tend to be levels where we get reversals off of. With price driving down in the overnight, this could be an opportunity for a nice little bounce, something quick. We had, one of these little spikes back up again.
Yep.
Remember last week, when we had it last week, we went through 9 strike prices on the binary. So there's absolutely, potential in these. And again, if you're not familiar with natural gas, it's just a chart. It's no different. So
we're going to go a little long today, folks, because there's just a lot happening. So we've talked about oil. We're looking at nat gas, and we've got that inventory level. Definitely going to be some opportunities there. Something I just like to point out quickly. We've seen dollar strength. We got dollar strength, and then you've got oil going lower, so that's going to hurt the Canadian dollar. This is why you see this chart going to the moon. You see oil start to rebound. We could potentially see a pullback and we're seeing some consolidation right here in the U.S. dollar, Canadian dollar. So there is definitely a link between oil and the Canadian dollar. Brian, with the U.S. dollar strength based on what the Fed did yesterday, you want to just do a quick peek at the pound for us, and then we can maybe look at one index like the Dow, and look maybe where we might see some buyers step in.
Yeah. So I would say pound dollar is probably the easiest. And again, the pound keeps going back and forth, where it's a very, very strong day, then a very, very weak day. It does have a lot of volatility back and forth. Yesterday we talked about 2 different shorts. If price got up there, right around we got really, really close. I don't know if you guys can see this candle right here, the one with a really big wick that spikes up again. That was the 2 o'clock candle, and we were looking for that to touch that one right at FOMC, and we got really, really close. I think I missed it by like less than 5.
So funny, that one spike.
Yeah, 3.6. I missed it by 3.6 for the short on that one. And actually, I guess I should adjust this just a little bit. It should have been there. So I missed it by less than 4 pips. About, I think it was like 2.6 pips I missed it by. So kind of your spread. Looking for this to push all the way down and push into this level down here at 137 or 136.90-ish level. So we did have a Harry Potter trade set up here where we're talking about if we can get a clean break of this level down here at 136.70. We haven't gotten it yet. We've hit it. We kind of bounced back again, and we're pushing down. With the U.S. market open coming, they're going to look at this and probably try to jump in onto it. We're getting that kind of basing level here, but I would say that this, continues to kind of push across. You're really looking for a clean break of that level and then some type of a base and then push lower. I would say, like I said, it's strong day, weekday, strong day, weekday, strong day, weekday. Right now with everything, and again, the U.S. market has kind of had an opportunity to react to the taper, but right now it's going to be all pushing probably more dollar-based. And again, the pound market only has 2 hours to close. So, it's kind of one of those things. The U.S. market tends to like making dollar strong, not dollar weak. The Europeans have taken care of that for us and have really kind of driven into this level and pushed deeper. So the question is, does the U.S. trader today feel that, hey, listen, no, dollar bad. If you guys want to push it down, there tends to be a counterplay. Today, I don't know. I think today they're going to jump on board with this weakness. And again, we're seeing, basically the dollar being strong. Taper is a big word, right? It's not as big as raise interest rates, but the next step is the raise interest rates part of it.
It's a matter of when, but it's not going to be fast. They'll announce that it'll be a year out.
Yeah, but they said taper this year. That's the important piece. They said taper this year. They've officially confirmed that we are taking steps now. And then again, remember, Biden gave them the go ahead to start doing stuff before and was like, yeah, they should definitely do something. And they were like, okay, fine, we'll do it. It's on you. But this is, and it's the way that this is all coming out, it's funny when people talk about how the markets are their own devices and they're not political and things like that. Biden made those comments. His approval rating dropped like 7% because of Afghanistan and things like that. Now we're seeing the strong dollar in here. We're seeing the indices all go down again.
Yeah.
At the same time, Justin Trudeau, again, it's not just a U.S. thing. Justin Trudeau says, we're going to call a snap election because COVID is working out great for me. I'm going to go for majority. And
Right.
what happens? The price of oil tanks, which tanks his economy.
Yeah, and
So
it's
yeah, so it's very interesting the forces of how everything works out.
how politics and markets work. All
Yeah,
right, let's just take a quick peek over at the Dow. Because I mean, we are looking at everything opening in the red.
yeah,
Uh,
everything's well, and most things are red right now. I mean, if you look, it doesn't matter. The cryptos are all red. Most of the currencies out there are red, besides a couple of the dollar-based pairs. I mean, silver is deeply red. Not deeply, but 0.3% down. Oil is red. Gold is up just a little tiny bit by 0.17. So they're all flat. The Dow is down about 1%, and I would say it has room to run. Remember, like I said, mentioned it yesterday. Taper was not a good word for everybody out there. We
right.
had a couple levels that we were looking for. This is let me go back down to 15.
And I
Um,
think, yeah, I think it's, I think we had to go back a ways down around that 34,400 level.
I mean, right here is where the statement came out, the 1:45, 2 o'clock. So the
Oh,
market had kind of
boom.
expected this, and we all, yesterday morning I said I fully expected them to talk taper. Multiple people on the board had said it. Voting members had talked about it that they'd be cool with it. So there's been a number. I mean, everybody kind of knew it was coming, and here was the result. A very very big drop. Now we have kind of had a bottom put in, but this is one of those kind of tricky bottoms, and some people will see this and look at this and be like, "Oh, I know what this is. This is a double bottom," and they can draw like the W here, right?
Right.
There's a double top and things like that, and people look at this and they're like, oh, "Okay, that should be a long signal. All it has to do is hit 36 or 34,650, right? That would be where kind of this the neck of it is." And they'll start going long. And again, everybody knows those things out there, so it's kind of one of those things you got to watch out for. But the fact that they basically had both these wicks came down to the same exact spot typically will tell you that there's not a lot sitting there. So a lot of people will see this big red and start immediately trying to short. There probably is a rollover point in here. The market has really kind of absorbed a lot of this. But I would say right now, with everything we heard from the CDC yesterday, earlier today, I got kind of a news update that they're saying that babies and infants actually are spreading COVID more
Yeah.
than youth are. And again, I have one of them right now. You guys know they drool everywhere. They put everything in their mouth. So of course they are probably bigger spreaders. It's kind of common sense, but it's another one of those COVID headlines that nobody really wants to hear. I also saw something that says there are thousands of kids, with school back in session 1 week, thousands of kids already inside of quarantine because of COVID.
Yep.
That's going to be something that we're going to hear about, and that every time we hear one of those headlines, this should continue to push lower. So be very careful with longs at the open. I would say the next area where we do have decent buyers in is 30,000. I'm sorry, 34,400. But again, if we get some basic in there and that thing breaks, yeah, I mean, we already have a Harry Potter, and we know what does it look like if we break 34,334 or 337. We have this. And again, you guys know what this is called. I call this a racetrack. It basically means that we don't really have any buyers until we come all the way down here to
All the way back.
33,921. So,
Yeah.
could we push down there today? I mean, this is only a 15-minute chart. We're a little bit above it, but if we break it, that's 450 points to the downside.
It could be a
So,
washout. Yep.
yeah, we could wipe all that stuff out and go back to what,
Manage your risk.
July.
Tread lightly, manage your risk. Binary options definitely a way to do that.
Yeah.
But there is going to be some volatility today, and it does create trading opportunity.
Yep.
So we did go very long today, but there was a lot to discuss because
Todd's fault.
And it's always my fault.
Todd's
Well,
fault.
we also had a slight technical glitch at the beginning, so we lost a minute or two. With that, any questions for Nadex, please email us, customerservice@nadex.com. Brian is also very accessible. Please feel free to email Brian at support@keeptradingsimple.com. I'm not going to do a full recap, but we've got the economy is starting to heat up. The Fed is acknowledging it, looking to start a taper of their support of the economy, not raising interest rates, just slowly taking away some of their support. We're seeing initial jobless claims dropping to their lowest levels, so people are getting back to work. But against that, we've got COVID starting to spread, masks having to start to go back on. We saw the manufacturing index drop Certainly not. I mean, some of that's not encouraging news. Where are we seeing the volatility? Oil is getting hammered. We've seen dollar strength with the U.S. dollar CAD going to the moon, the pound dollar, falling through the floor, and we're seeing the equity indices all looking to open in the red this morning. And that's the summary. We'll catch you again tomorrow. Want to give you a chance to go get ready for your trading day. Thank you for joining us. And